Ladies and gentlemen, we are back and we've got a couple of interesting stocks to talk about. And before you wonder, yes, these headphones are temporary, just like my sexual encounters with your mum. Unfortunately, my audio technicas are bust, so I'm just borrowing these for the time being. And we're going to take a look at two stocks today, APX and ENV. So here's the announcement for ENV, and I just want you guys just to skip it. If you haven't seen this stock, I want you to skim this. I want you to pause this video for about 30 seconds and just read what this is. Just skim it like it's the morning session. Because we're going to break down what's wrong with it and why it looks so good. And then talk about the price action that follows. Because I think there's a lot of complexities to this announcement and a lot of traps as well. So first we're going to take a look at the headline because that's something everyone reads. World-class clay-hosted rare earth grades. Mwah. That is the pumpiest shit I've read this year. Uncovered at Coda North. All well and good. And then the next thing your eyes are attracted to are these grades. And these aren't that bad, right? 4,000 ppm. You know, an 8 to 10 meter hit of 1,200 ppm will get you about 12 to 15 mil market cap. This might land you somewhere in the 35 to 45 mil market cap range, depending on how much the market loves trading rare earths at the time. So we'd be looking at sort of maybe the bottom end of that. And really, the trap here is this part. Historical diamond drilling. I can't tell you why the market doesn't give a fuck about historical grades. I've seen this time and time again. The market doesn't give a fuck if it's historical grades. If it's fresh drilling, this would just rocket, right? This would be beautiful to trade. But historical diamond drills suck. They just suck. I don't know why, they just do. Market doesn't like it, and therefore that really just destroys this whole announcement, is that part right there, historical. There's a couple of things worth doing a Control F and searching a document for. One is the word infill. Second is historical. You see either of those words, get the fuck out of that trade. You should not be sorry, that's financial advice. I will not be taking those trades if they have those two words. Also, it's worth noting is that these are clay hosted, not necessarily ionic clay. There is one mention of ionic, and that's down here, and that's a reference to Appendix number 1 is the acquisition of world-class ionic clay, but there's no other mention of ionic in the document, which is a bit sus. They do mention clay, but not ionic clay. Now, whether that factors into this, I'm not entirely sure, but this is already bad enough with the word historical. I believe these guys have less than $1 million left in the bank. I think it was somewhere around 380 to 400k-ish of cash. I don't exactly remember the number, but it's very low, and that was last quarter. So we're already partway. We're almost at the end of this quarter as well. So there's going to be a cap raising, I believe. There might be some options, I think, as well that were done. So there's a lot of dilution as well. So this is about 680 mil shares on issue, but you factor in the options and stuff like that, it pushes it closer to over $1 billion SOI. So again, it's not looking great. So what does one expect when you see this really pumpy sounding announcement, but you get something like a curveball of historical diamond drilling? Well, there's only one real thing, and that is a sell-off. So I mentioned this first thing in the morning, and that is SFR is worth watching because of COPX. So copper's doing really well. SFR is worth a watch. And worth noting, ENV is historical drill results, red siren flags. And then the trade was matched to 5 cents. Then a collapse is the absolute best scenario I could possibly think of for this stock. So that was the call out this morning. And we've got the chart here. We have a gap up and managed to gap up to 4.8. It was looking good at 4.7. And this is the 5-minute chart. So bring up the 1-minute chart. This lasted just a few minutes. Ended up touching 5 cents. I don't think one could have sold at 5. I'm not sure there was enough volume that pushed through there. But okay, there might have been. That's a lot of volume there. So 11 million shares just pumping through and then just collapsed. And then all the way down from 5 down to 3.2. That is a fucking disaster. And there's going to be a lot of baggies, right? Look at this zone here to 4.4. That is disgusting. Look at all these volumes here. And these are all retailers, right? These are people like you who watch these videos, right? You're the target audience for this kind of dog shit, right? This is where retail money goes to die, is company announcements like this and just stocks like this in the microcap space. My job is to help you navigate so you don't get stuck in these dog shit announcements that look really fucking good. It reads really good. World class. Oh my God, are you serious? World class at how many mil market cap? 35 mil market cap when it opened. Mwah. It reads like an absolute gold mine, but it is dog shit. So that's the trade, and here's the daily chart on the right hand side. You can see just how absolutely brutal this thing is. It probably retests 3 cents and continues to the downside and gets hammered. And I strongly encourage you guys to read Hot Copper to get an idea of exactly why one should not be reading comments on Hot Copper. Because if you look at the comments, holy smokes, those are some serious grades. World-class clay. And then just really pumpy comments from everyone that's just going to lose money. These are suckers. These are the absolute garbage end investors of the ASX. And that is Hot Copper comments by these people in microcap space specifically. So you can read all of the comments, really pumpy. It's so gross. It's really gross. And then we're going to look at APX next. So ENV, unfortunately, there are no shorts available, so one couldn't really take a trade except maybe the match and maybe take one tick, maybe two. Not worth the risk, given also if we look at volumes here, and we'll take a look at the volumes on the daily chart just to emphasize why this is not good to take a trade. So the volumes here are really high. Just look at how many shares there are. 144 million were traded, 142 million the next day, and then you've got a bunch of other trades here at 74 mil and 71 mil, and a large portion of this is trading at above 4.8 cents. So what's that tell you? That tells you there's a shit ton of supply. Now, one doesn't exactly know how much is left over, but judging by the sheer amount of volumes, historical volumes here, there's going to be a lot of people breaking even or wanting to break even. So that's why we end up having that 11 million smackdown. So this 11 million trade here on like the third candle of the day, and it just gets melted down and then high volumes follow. Right? There's a lot of people that would just happily break even with a lot of size on, basically. So if a stock gaps up, and let's say we don't have this historical volume, let's say it's just maybe, let's say we have a quarter or a third of these volumes, especially these two candles, and the stock gaps up to like 6 cents. Suddenly we don't have historical baggies. We don't have people from like a week or two ago that just want to break even. That doesn't exist anymore. We're in blue sky territory, and the stock stock has a better chance of rallying and breaking into new highs than it does if you're opening up into the previous highs, particularly when there's a lot of volume. So that's one thing worth noting is, and this thing just looks disgusting at this point. Really, really rough. It might be a bounce or two somewhere, but the risk just isn't there for me to touch it. So I think I covered a lot of little aspects to this trade when you're looking at shares on issue, when you're looking at how much cash they have, how much cash they're getting in from injections and diluting the shares on issue, from the Hot Copper disgusting posts that people have that are hyper bullish. And then we've got the world-class announcement, the headline. Then we've got the actual reality of historical drills. I mean, there's a lot of pieces right there put together. And then you got, of course, a gap up from 3.9 to 4.9. So you got a whole 1 cent gap up. That's a big gap up. And usually gap ups on micro caps like this tend to keep rallying. But when you put all the pieces of this puzzle together, it's disgusting. It's just gross. And it ends up looking like this. So what we also have is we're going to take a look at Appen. Appen is a fan favorite the last few weeks. It's just been on a technical tear on the upside. So we're going to take a look at the daily here. Guys in my Discord, including names like Parag, you guys might know, has been talking about this one ever since it broke out to the upside. I think his first entry was this buy here around 33 cents if I'm correct, and then everyone else kind of caught on once it broke out, so started making higher highs and higher lows, and we all kind of just got on, especially around this 40 cent level, because it was just clearing this pivot here you call this a bit of a pivot, this gap fill, if you will. So it hits the gap fill, pulls back, retests, holds on, and then breaks out. Once that breakout happens, you got following on volume, and it's just clear as day what's going to happen. These sort of wicks here were perfectly fine because there was just a lot of support here in the 50s, and it just kept going. Absolutely beautiful. I sold pretty much everything into the 70s, high 70s, I believe it was. I didn't think it would cross this pivot point here, so we've got sort of two data points here. We've got 80, and then I think it's 80 and 81 or something like that. I was kind of expecting a hit at the top, a bit more of a substantial pullback, and then go again, but unfortunately I sold way too early, and then literally the next day it just monsters up, opens at like 87, pumps to $1.15. And of course that's a bit of a blow off. It's just, excessive price action. It's got to pull back. That's exactly what it's doing. Where's it going to pull back to? Well, there's a little bit of a pivot or a range here that we're looking at, and that is back to this level here at 75. And then there's just this little shorter term pivot that we can see here where it wicks down. You can see it bases and closes at 75, or opens and closes at 75, and it wicks down during the session a couple of cents, and it sort of holds this 72-cent level. And now after a few retests, it's swinging back to the upside. And I'm just going to bring up the 5-minute chart and talk about the entries that I ended up getting. Now for me, I don't necessarily buy into this idea that the stock gets to $1.50. This is a target that Parag has come up with. Look, he's the swing trade god. Me, not so much. I'm not big on swing trades lately. The last few years, it's just not my thing. But I've really enjoyed the price action, how this stock is holding up, and also I bought quite heavily based on the earnings report that came out recently. So the earnings were actually quite healthy. They looked negative, but compared to what the market was expecting, it was actually super positive. So that helped me with the fundamental aspect of things, buying into this stock, and now heading into another swing to the upside. So I rebought today and Friday. So we're going to take a look at the 5-minute chart. You can see how this thing blew off, gap down hard based on news. You guys can look that up, but basically it was a takeover offer from like back in 30 cents or something like that. It was unconditional, yada yada yada. Long story short, it's irrelevant. So gap down to 80, monster spike to $1, and then from there it kind of just pulled back. Now what we have is higher highs and higher lows, which again is another aspect that I enjoy of swing trading. It's really clean, really simple, and it's just finding out where the highs are, where the lows are, and where it's reversing. So as you can see, from this point in time, from $1.20, it made a lower high at $1.02, lower high at $1.01, lower high at $1, and then it dropped again, lower high at 87, lower high at 83, then 82, and then this ended up being the first time we got a higher high. Just change that color to yellow. So we got a higher high for the first time here. And now what we're looking at, what I'm looking at, is where is the low. So I ended up getting this at 79 cents on Friday. It was sort of just bottoming out here, so I decided to buy just before close. It's like, cool, okay, so we got, if I just keep drawing these, so we got pivot, 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 pivot. So you can see lower high, lower high, lower high, and boop, first time we've got a higher high. Now, higher low, now that's formed, I can add on to the position. It's like, cool, but does this break out? Yes. And this keeps changing to the color black. So it ends up breaking out into higher highs again from this pivot here. So we got another higher high, and then we end up forming a higher low, which happens to coincide with this trend line. Now, I'm not a big fan of trend lines. I don't really care for them, but what I care about is mostly pivot points and breaking into higher highs. So pivot, pivot, pivot. Pivots are awesome. They tell us a story of a stock. We got the resistance, we got support, and now I added on at 81 and 81.5 today. The idea is the stop loss is to be below this level here. You might be wondering, well, why not something tighter like 79 cents? Because then, hey, it's it'll break that trend line, right? This trend line here. It's like, yeah, but that doesn't matter. To me, the trend line doesn't really matter. This is a short-term thing. The stock probably just doesn't give a shit about such a pivot. Such a trend line. or level. So for me, pivots are key. This 77 must hold, and I'm willing to give it an extra cent and a half or so. Just if it wicks down, that's fine. I'll get stopped out, such is life. And that's really it. Just really targeting this move to the upside, slow and steady, watching it every day, keeping an eye on the price action, making sure the bids are coming in hot, defending levels. And I really do like the look of Appen. I didn't think $1.50 was possible when it was first called out in Discord back in the 40-cent range. I thought it was a little bit extreme, but you know, when it popped to $1.20, it looks reasonable. Like when you look at the volumes here, look at the volumes of selling coming through, and the price is still holding up. When you get these kind of sell volumes, you expect big price action to follow, right? Looking at these volumes here, and what's it do? It holds a level, and now it's starting to swing back up. And I'd expect volumes to start rising back to the upside as it clears sort of pivots that might exist in here, such as maybe around, I think, 86, which you can see is a level here. That sort of is exactly where the higher high stopped. And there's quite a bit of volume here, and maybe the next level is probably going to be around $1. $1 is a magnet. There seems to be not a whole lot in terms of pivots and targets between $1 and 86 cents. So I think if this decides to break through this 80 cent level, I think once this hits 90, it might pull back to 86 and then just make its way to $1. Pretty straightforward and clean. There shouldn't be too much in terms of issues of resistance there. So that's my thoughts on Appen. Again, nothing of this content is financial advice. Not telling you what will happen, just what can happen. What are my thoughts on a trade and why I'm trading what I'm trading. So if you found it helpful, please hit that like button. I'd appreciate that a lot. And for those of you who stuck around, there is a new bot that I put in Discord. For some of you guys might find it super useful, is the info bot. So we can put in info and type in, let's say, PLS. We get all the information that's necessary for PLS, and then we can do cash PLS, and we see how much cash is remaining for the stock. So it takes a couple of seconds, but the bot will pump out the dollar redos there. So 2 new really helpful bots. Also, I've got an AFR bot, which posts information straight from the Australian Financial Review straight away. Anything to do with an ASX related company, it posts the content straight away. So you guys can get an edge in terms of speed of execution. If you see a piece of news that comes up, a nice headline related to a particular company, you can get a trade on. So guys, I'll catch you in the next video. Peace.